Problem 3 of our general insurance company accounts. We are going to look at again preparation of the revenue account of an insurance business, and in this case it is specified that they are engaged in marine insurance business. So since we are dealing with general insurance, we had already discussed the different types, and so far we have looked at accounts of some fire insurance businesses. Okay, the type of items, the type of expenses, incomes you will see are not very different from fire insurance. You will have pretty much almost the same things that will be shown, but having said that, you will also have certain things to remember that are specific to marine insurance, like the percentage of unexpired risk. You have a certain percentage for marine insurance businesses, and you have a percentage for fire insurance. So we'll accordingly see what they are, and you will have to remember those particular percentages. Okay, so for now, let's see, we're going to deal with this revenue account, okay, and see what different incomes, expenses are given to us. Accordingly put them in that respective schedule, and we will also start the problem alongside as we discuss this. Okay, and this is what your solution will be over here, and up here we will look at the problem. So we are given again things like premium received and paid, then also receivable and payable, which means they are outstanding as of this year, previous year, outstanding as of current year. We already know how to deal with such outstanding amounts. Also, when they say received or receivable, we know that it is either on the direct business or it is on reinsurance accepted. Premium received, so reinsurance accepted. Whereas if premium is paid, of course insurance businesses never pay premiums, they accept premiums, right? But when do they pay? When the reinsurance is ceded to some other company, then they have to pay that premium to the other company. Okay, same way payable on the for the previous year, payable for the current year, all these outstanding balances we are going to adjust. Same way, we have other items like claims and commission given to us in a similar format. Claims paid are the actual expenses on direct business and on reinsurance accepted. Same way received, right? It's a business, an insurance business can receive claims only when it has ceded the reinsurance business. Okay, so all of these amounts and some other expenses and incomes are given to you related to things like salaries and all type of operating expenses. Then you are given some other incomes also, some profits also, and we are going to accordingly see where these will come in the revenue account. So if you can see, this is a little more detailed revenue account with many different new adjustments that we are going to get to see. Okay, so let's see now. In the first case, we have your premium, right? So premium which is received, that is on direct business, okay, that we know directly. We don't have to decide what type it is. So premiums, of course, all of the premiums will go under schedule 1, okay. Premiums paid also will go under schedule 1, any type of premiums. So premiums received on direct business, okay, this will go directly. Reinsurance column, what premium received is given is on reinsurance accepted. I will write it this way, RA and RC. Okay, same way all of these are on reinsurance accepted. They are outstanding for that particular year and outstanding for the current year, right? But they are all on reinsurance accepted. But if you pay premium, that means it is on reinsurance ceded. Fine, all of these. Anything that is of the previous year outstanding, that has to be minused. Anything that is outstanding for the current year, has to be added. Okay, same thing will be done here, less for the previous year, add for the current year. So simple, we know which is accepted, which has been ceded. Okay, same thing is with claims. When claims are paid, they are either paid on your direct business or they are paid on reinsurance accepted. Okay, same effect, less if it is outstanding for previous year, add if it is for current year. But if it is paid, that means it is reinsurance accepted. You took the reinsurance business, right? You accepted it. So now you are responsible for paying the claims. Same way, you can receive claims only if it is on reinsurance ceded. If it's outstanding previous year, less, outstanding current year, add. And in case of commission, things are given to you in a more direct manner. This is direct business. This is reinsurance accepted. It says in the problem itself, on reinsurance accepted, and on reinsurance ceded is 14,000. Clearly given to you. Okay. So with this information, we move on to preparing our schedules to the revenue account, and accordingly any additional working notes related to these outstanding figures we are going to do them right now. Okay, so remember this, in schedules we are going to show the main calculation, direct business, reinsurance accepted you are going to add, and reinsurance ceded you are going to deduct. So you are going to show the final calculation of the premiums earned net amount, right? Whereas any additional calculations like outstanding premiums of the last year, of the current year, all of these are going to be done using this working note. Okay, we are going to do it in this working note. Is that fine? So in this working note here, the last time we had dealt with claims incurred. Just leave this over here. This. Similarly, we are going to do a working note for premiums. Okay, so premiums earned, working note for premiums earned, and a similar type of table will also be prepared for premiums. Done? Okay, so instead of claims, we will write here premiums during the year. Okay, so of the current year, let's see what premiums are there. This is the premium received, okay, for the current year on direct business and on reinsurance accepted. We'll take only the received part first, right? So premiums during the year on the direct business 24 lakhs, correct, this amount, and on reinsurance accepted the premiums of the current year, I'm going by the order of the problem, okay, are 36 lakhs, fine. Now receivable as of 1st April 2017, which we have to minus, is 1,20,000. I think it's always best to draw out this pro forma of yours and then just substitute figures wherever they go. Okay, so on direct business it is 1,20,000, and on reinsurance accepted last year's outstanding amount is 21,000. Am I right? So once you have done this format, you figured out this format, you just have to enter those amounts respectively wherever they belong. Okay, so 21,000. Now, next we have outstanding as of 31st March 2018, current year. Okay, so current year we are supposed to add the amounts, add outstanding. So on direct business, add outstanding is 1,80,000. Put it wherever it fits. Okay, add outstanding is over here in the pro forma, and on reinsurance accepted it is 28,000. I right? Yes. So both of these amounts are there with us. Okay. Then we have, I'm going by this order instead of finding out what is ceded and everything from the problem. I'm going by what is given in the order of the problem. Now is premium paid on reinsurance ceded. Now this is of the current year. When nothing is mentioned, whether it's outstanding or not, it is of the current year. So 2,40,000 reinsurance ceded, payable on 1st April 2017, that is of the last year, which you have to minus, is 20,000, and less outstanding will come over here. Okay, and for the current year, outstanding is 42,000, which will come here. Add outstanding 42,000. Okay, now take simple totals of all these and add minus wherever required. 24 lakh minus the 1 lakh 8 plus the 1 lakh 80,000 will give you 25 lakh 80,000, right? Same way 36 plus 28 this is amount here. I think there is a small correction to be made. Give me a second. Yes, this amount is corrected in the problem is actually 3,60,000. Okay, small error in the problem. This is 3,60,000, not 36 lakhs. Alright, so this again will be 360. 3,60,000. So that 3,60,000 plus the 28,000 will give you 3,88,000. And the last one 2,82,000. Now accordingly minus all these amounts from this 2580 minus 1,20,000, 24,60,000. Done. Then you have 3,67,000 and you have 2,62,000. Okay, so that was your premiums earned. We have calculated all the final amounts that will go in your actual revenue account. Okay, so we have from direct business, from reinsurance accepted, from reinsurance ceded. Let's enter that in the revenue account where we have calculated our schedules. So let's see. From direct business, now we are going to look like this. Okay, look in this order. Find vertical order. Earlier we were looking at the horizontal order for how much is outstanding. Now it's this way. So from direct business it is 24,60,000. Add to that reinsurance accepted, we have 3,67,000. Okay, and from this minus for reinsurance ceded 2,62,000. So how much do we get? 24,60,000 add 367, you have 28,27,000. Deduct from that 262, what you get outside is 25,65,000. Total premiums earned, net premiums earned 25,65,000. Is that fine? Is this getting a little more clearer? So remember the rules. If it is premium received, that means it is always on reinsurance accepted or on your own direct business. If premium is paid, paying premium for insurance companies, paying the premium is like a very unusual activity. They don't pay premium to clients, right? But they do pay premium when they have ceded the reinsurance, right? So RC, and then minus previous year's outstanding balances, add current year's outstanding balances, and you have this entire working note. Okay,